Imagine waking up tomorrow and discovering that your neighbor just made $20 million. Not because they sold a business. Not because they won the lottery. But because they worked at an AI company. Sounds crazy? Well, that's exactly what's happening right now. Thousands of employees at AI companies are suddenly becoming millionaires through stock sales, funding rounds, and upcoming IPOs. And they're putting that money somewhere. Not crypto. Not stocks. Real estate. The question is, can you still profit from this trend before everyone else catches on? Every generation gets a wealth creation event. The Industrial Revolution. The Internet boom. The smartphone era. And now, artificial intelligence. Companies building AI tools are reaching valuations that would have sounded impossible just a few years ago. As these companies grow, employees receive stock options. When those shares become liquid, huge amounts of wealth are created almost overnight. New millionaires don't usually park all their money in cash. Historically, they buy assets. And one asset has always been a favorite: real estate. Because real estate offers leverage, tax benefits, cash flow, and long-term appreciation. That's why every major technology boom eventually spills into housing markets. We're already seeing signs of that today. Think about it. Let's say an AI engineer suddenly has a net worth of $5 million. What's the first thing they do? They upgrade their lifestyle. Better house, better neighborhood, better schools. That creates demand. And demand pushes prices higher. But here's where investors make money. The biggest gains often happen before the mainstream notices, not after. When Amazon expanded, surrounding neighborhoods benefited. When Tesla exploded, nearby markets benefited. When major tech hubs grew, property owners benefited. AI is following the same pattern, but the speed is different. AI adoption is happening much faster than previous technology cycles, which means real estate markets could react faster too. Most investors make the mistake of chasing headlines. Instead, follow talent. Where are AI companies hiring? Where are data centers being built? Where are venture capital firms investing? Where are engineers relocating? Those areas often become tomorrow's high-growth housing markets. Technology corridors. University cities producing AI talent. Data center markets. Emerging innovation districts. Cities with growing startup ecosystems. Infrastructure matters too. Whenever jobs arrive before housing supply catches up, prices usually move higher. That's the formula. Not hype. Economics. Supply versus demand. Here's the interesting part. Most people think AI only helps technology stocks. That's a mistake. AI is creating secondary winners. Construction, property management, data centers, industrial real estate, rental housing. Even AI-powered property analysis is helping investors identify opportunities faster than ever before. In other words, you don't necessarily need to invest in AI companies. You can invest in the real estate that benefits from AI growth. And sometimes that's actually the safer play. Now, before you rush out and buy property, let's talk about risk. Every boom creates excitement. And excitement can create bubbles. Not every city will become the next AI hub. Not every startup will survive. Not every property will appreciate. The best investors don't buy because of headlines. They buy because the numbers make sense. Strong job growth. Limited supply. Healthy rental demand. Good cash flow. If those fundamentals aren't there, walk away. The AI revolution is already creating enormous wealth. And history shows that when wealth is created, real estate is often one of the first places it flows. The investors who win won't be the ones reacting after prices explode. They'll be the ones identifying opportunity before the crowd arrives. So here's my question for you. If AI creates the next real estate boom, which city do you think benefits the most? Let me know in the comments. Subscribe now because the next few years could create some of the biggest investing opportunities we've seen in decades. I'll see you in the next video.